Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Before getting into tonight's video, I do want to reference the live stream yesterday. I went through a couple detailed presentations. So the first hour of the live stream, I think it's all been marked up so you can see what I was talking about throughout the live stream. It was 2.5 hours, but there was some substantial content that came out yesterday concerning yield curve, interest rates, some economic stuff that I think you'll find interesting. So make sure if you have the time to go ahead and watch that. But as we look back on yesterday was basically a grinding day. We came in from a technical viewpoint around an S2 level on the S&P and rebounded throughout the session, actually was able to move higher. For the most part, yesterday's action was about some acquisition, CRM, and some other news around with Microsoft and a little bit of a war going on. But other than that, there was nothing material effect that really mattered. We did see mortgages come out yesterday showing a slight downtick in activity. Also, we saw ADP come in at 307,000, which was well below the 350 plus that was expected. And this continues that theme that I've been talking about for the past several sessions, that the economy is continuing to slow down a bit as we come into year end. As I said in the last couple of videos, this is probably a seasonal tendency. Definitely we're on pause right now, and as far as expecting any kind of stimulus or anything out of Congress or the House, I would not put a lot of weight on that. There was some talk around that today. There was a little rally that happened intraday based on Schumer and Pelosi talking about it, but you know, until the other side of the aisle to talk about it, it really doesn't matter at this time. And it's all jawboning, just like they've been doing for about 4 months right now. It's just talk, trying to show that they're doing something when they're really doing nothing. We know this. But as we look into Thursday, we do have claims and the continuing claims coming out. Claims are expected to be up again, about 750. My expectation is for a 5.8 million number on the continuing claims. And I think that number, if it does uptick, that will be really a negative. There could be some further pause in markets, and market sentiment could stall a little bit here. As I mentioned in yesterday's video, I thought markets are still grinding higher, but there's not a lot of momentum or not a lot of vig in the market to keep it moving sharply higher or be able to accelerate from this current configuration. Case in point is that the S&P was up 0.2 yesterday, NASDAQ was minus 0.1, and Russell was up 0.1. So very lackluster day overall, and I expect to see this continuing as we come into Friday's report. So today is likely to be yet another grinding day, maybe with a slight bias to the downside. Let's go ahead and take a look at the charts, see what they're telling us for Thursday. As I review the WaveTech database, very little to talk about. Not only was yesterday's market action very lackluster, the action coming out of the database reflects what happened yesterday. We had roughly 250 new buy signals, and we had 310 sells. We actually had a negative rotation on 1.2 and neutral on 3.2. So nothing really changed. 78.24. The database is basically exactly where it was yesterday. I mentioned this in yesterday's video that the database is potentially starting to max out here. The key element to watch now is going to be the duration of the trades, not so much whether it's overbought getting up to the 78% level. And it may be at that level, and that may be the grinding that I'm talking about, the sideways action that we're seeing. We're still dealing with the RXT sell, which I'll go through here in a minute, that came in on the cash a day before yesterday. this configuration here is likely to suggest that we still have at least another 15 to 20 plus days in this configuration, where right now the current average duration is at 13.76, and with no new trades coming in at the moment, this is likely to start to play out, getting toward that number that I've been talking about, moving towards somewhere between the 20th right into Christmas, maybe year end. The database is going to be somewhat overbought, maybe extended at that time. The activity that we'll see in the next couple of weeks, that will definitely lead us to a conclusion as far as what's likely to happen as we come into year end. As we begin with the S&P futures, they're down 3 handles overnight. They were down a bit more. It's been a very lackluster night so far. 53,000 contracts traded. It's about 30,000 off what a normal, more active night would be. So we're definitely seeing everything slow down here. And I think everybody's waiting for this continuing claims number to come out tomorrow. That may be a trigger point. As I mentioned in the opening commentary, I still expect to see this thing grind out here within the grid. As we look at the market grid for today, right now my expectations are an S1, maybe an S2, that's 36.56. We've been down to 36.61, so we've not quite traded an S1 yet. R1, 36.78, the high is 36.74, so we're trading between S1, R1. I still see a slight bias to the downside, so we could see R1, S2. The configuration of the market here is going to remain very tight. We're seeing a mixed view on the PPMs as well. Now, PPM1 has actually crossed to its first derivative overnight with this, even with this slight downtick, but we're seeing PPM2 roll over and PPM3 roll over. So this is usually just a sign that we're going to consolidate up here. I don't think we're going to be rendering new highs, even though we were able to spike above the high that we made on November 9th. We're still not seeing that VIG or that acceleration here. That's just telling us that we're going to continue to be in a very lackluster mode here. Possibly Friday's employment numbers will be able to stimulate something. We'll see how it sets up after tomorrow. But for right now, we're looking for on the futures, S1, S2 on the downside, R1 on the upside. I don't see us getting to the R2 number 36.91, but it's certainly in play if we can get above 36.78. The S&P cash is telling the same story. As I mentioned, we did get that RXT sell. We should get 2 days sideways minimum, possibly 3. Still looking for us to trade down deeper into the grid, but the grid is actually rising slightly now. We actually increased just a touch, but we're seeing the bottom end of the grid around 36.43. So same as in the futures, looking for S1, S2, 61 to 52. The way we're set up right now, we're going to come in probably around 61 if we keep the same tone as we come in to the U.S. Open in the morning. But this will actually set up the pattern. R1 is 36.76. That is likely to be around the high today. Look for a move at least to 36.52. We could trade down into 36.43, but overall, we're seeing that contraction. Now, the same as in the futures, we look at the PPMs. They're very mixed, with the PPMs that are likely to turn down on PPM 2 and 3. PPM 1 is likely to uptick slightly. Tomorrow night, as we come into the final day of the week, I will discuss the setup here for Friday's action and how we're likely to end the week. Next market I'll cover is the Russell. The Russell also got an RXT sell, but it got it on the 24th of November, and we've been trading in this sideways range. We did trade down to the 10-period moving average. The 10-period moving average will continue to be a key point, 1820. Yesterday's low, 1817. As we look at the grid for today, we're looking at S2, 1822, S1, 1830. So expect to see us, just like all these features are set up, R1, S1 is the minimum outlook, possibility of going down to S2, 1822. If we did get above 1845, we would see a move toward the R2 number, but we're going to be very constrained, or so it would appear, as we come into Friday's range. Maybe the claims numbers or the continuing claims can actually get some volatility in the markets. We'll have to see how that unfolds once the news is out. Next market I'll cover is NASDAQ. NASDAQ's very quiet. We're up 0.19, up 24 handles. We're at 12,478. As we look at the grid for today, S1 is 12,406. We've had a low of 12,455, so we've not gotten down that low. The high so far for 12,497, R1 12,502. So this contracted range, also the very low volume overnight, is indicating that we're going to at least come into the report in the morning to see if we can build any momentum on the upside. But as I mentioned last night, there is a continuing configuration that suggests there's a slightly stronger undertone to the NASDAQ, but we're likely to see this thing trade down into S1, S2 today. I don't see it breaking out of there. The extreme will be an R2, be 12,566. That would be a new high in the pattern. I think the probabilities at the moment for that to occur are fairly low. And as I've been mentioning over the last couple of days, all of these markets are going to stay within the grid. So we could trade in a higher range, but we're not going to see a steep breakout. There just doesn't seem to be the stimulus or the setup, and especially with the mixed pictures in the PPMs. The final market that I will cover tonight is gold. Gold is continuing to trade above its 10-period moving average. Right now, that number is at 1826. We're trading 1836. We're trading just above that 0.236 number on the Fibonacci grid. So we're actually moving up toward the 21-period moving average, 1863. As we look at the grid for today, R1 is 1837, so we traded just above that. I would expect to see an R2. S1 will be the extreme on the downside. We printed 1828 overnight. 1822 would be an extreme. So this market will stay stable. We're also seeing PPMs trying to turn up. I talked about this yesterday, that we may start to set up a reasonably good bottom here that potentially can move into an intermediate trade. As we look at the weekly, we have traded back toward that 40-week moving average, which is 1836. We're trading right at that level right now, 1836. The cluster of numbers around this 1833, 1836, the extreme numbers up here as we look at the grid on the weekly is 1833. The next level is 1857. We could continue toward that level. That would be a very positive sign, but the key level to watch for as we come into the week, if we can close back above that 40-week moving average at 1836, that will be a positive. We'll probably see some retracement early next week, but that'll start to set the tone to move up toward the 10-week moving average, which is currently 1891. This will complete the video for tonight. Thanks for watching. Make sure you review that live stream that I did yesterday. We'll see you tomorrow night.